So now moving to the next point, the module number 3, ratio analysis. This ratio analysis is also one of the analytical tool of the financial statement. And under this ratio analysis, we are going to compare the two variables as per their consideration, as per the requirement, and on the basis of the comparisons of two variables, we would be find out some analytical idea how the company is actually working, what is the situations, and now what to be taken, what are the steps to be taken for the improvisation. So one by one I'll try to solve out the few problems in front of you which are related to the ratio analysis, different methods also. In case of, if you are going to refer at the time of a theoretical concern, we were actually having some classification of ratio, and under that classification of ratio we would actually try to solve out the functional classification. On the basis of that functional classification, traditional classification as well as the functional classification. So the basis of that traditional and functional classifications, I am going to solve out 3 problems in front of you. That first problem is related to only ratios which are concerned with the profit and loss account. Second problem, which is related to the only balance sheet ratio, that means the all balance sheet informations variables to be compared and find out the ratios. And the third is a composite ratio, where the one informations may be taken from the P&L account and other informations would be taken from the balance sheet and then compare. So but all these 3 ratios are actually covered all the different type of classifications. Let's begin with the first questions from the practical problem segment. In that, the first problem, the question is the following trading account and profit and loss account of Fantasy Limited for the year 31st March 2000 is given below. Calculate few ratios like gross profit ratio, expense ratio, operating ratio, net operating ratio, and stock turnover ratio. So these are the ratios which we are going to compare. Let's begin that the part of the informations which we have. So here, as I assumed, all of you have questions in front of you and in your hand, and on the basis of that we will try to solve out the ratio. The first is gross profit ratio. Gross profit ratio is actually reflect the gross profitability of the company, and that gross profit to be determined with the comparison of sales. As I said, this is a ratio related to the revenue ratio. It means all the informations and all the variables for the calculation of ratios to be taken from the revenue statement only. Gross profit, you can take it from the trading account, or you can check it out from the trading account. The sales is also available with the trading account. Now you see your trading account where you have a gross profit of rupees 2 lakh. Gross profit is rupees 2 lakh and the sales is rupees 5 lakh. As I already mentioned at the time of theory, that some amount of ratios would be find out in percentage, some ratios find out in proportion, some ratios find out in number of times, some ratios find out in number of days. So ratios can be find out in many parameters, in many ways. Here the ratios would be find out in percentage, and that's why it is multiplied with the 100. And if you are going to check this ratio would be identified. It comes to answer is 40%. So the identification of this ratio, it shows the gross profitability margin is 40% of the net sales. That means the company earned gross profit of 40% of the sales. Next ratio is expense ratio. Expense ratio is covered only operating expenses. Operating expenses is going to compare with the sales into 100. And these operating expenses are covered only the amount of operating expenses of admin expenses and selling and distribution expenses. Now you see your question where you have operating expenses, admin and selling expenses are, total admin and selling expenses are 1,13,000 rupees, 1,01,000 plus 12,000. So 1,01,000 and 12,000, total operating expenses is 1,13,000 and the sales is 5 lakh. and the sales is 5 lakh. When you are going to compare this 1,13,000 and 5 lakh, your answer would be coming, it's around 22.60%. It means your operating expenses contributed in sales, it's 22.60%. So this ratio would be added. Now, where this ratio would be helpful? When you find out the trend. If you have a 3-4 years information of this ratio, you can easily identify then what was in the last year, what was in the last to last year, what is in the current year, and then on the basis of this comparison of 3 years ratio, you can determine your trend analysis. So the operating expense ratio, this expense ratio would be showing the how much amount of the contribution of expense in the total sales. Moving to the next ratio is operating ratio. Operating ratio is actually covered all the operating expenses including cost of goods sales. This is only expense ratio. This operating expenses, all the type of expenses would be covered here. And then the formula for the operating ratio is that the cost of goods sold, COGS, plus operating expenses divided by sales into 100. This is a formula for operating expense ratio. Now see how you can find out the cost of goods sold. Cost of goods sold, you can find out that the sales minus gross profit. That is the one formula, that the cost of goods sold is equal to sales minus gross profit. And the another formula of cost of goods sold is opening stock, purchases, purchase expenses, and minus closing stock. This is the another formula where you can find out the cost of goods sold. When you apply this formula, you can find out the cost of goods sold is around 3 lakh rupees. Cost of goods sold is around 3 lakh rupees. Operating expenses was already found out here, that is 1,13,000 rupees somewhere. So now 3 lakh plus 1,13,000 divided by 5 lakh. As I already mentioned, this ratios would always find out in percentage. So in the basis of this percentage, that the comparison of this your answer would be around, that is 82.60%. Your answer is 82.60%. It means that the amount of operating expense or the total expenses, non-cash items, that means financial expenses would not be considered here. So all the non-financial expenses may be there, but financial expenses would not be considered when you are calculating operating ratio. So that is 82.60%. It means that the 82.60% of the sales has been contributed by only expenses, operating expense ratio. That is what the operating ratio. Now moving to the next profit, that is net profit ratio. The net profit ratio's formula is net profit divided by sales into 100. Same like a gross profit. And net profit you can find out from the profit and loss account. This profit would be found out from the trading account, and this would be this is to be identified from the profit and loss account. Ultimately, it shows a picture of the how much percent of the net profit contribution in sales. So we need two informations. One is a net profit, another one is sales. The net profit so far is showing by the P&L account, it's 84,000, and then the other one is sales. The sales is rupees 5 lakh. And when you compare this, your answer would be around 16.8%. Your answer is 16.8%. That means it shows that your net profitability on sales is very much close to 16.8%. If fine, industry wise, sectorial wise, maybe I just want to tell you the 16% profitability is it's reasonable. That means the good amount of net profitability is there in case of the company or in case of the amount which they are received. But if they are going to compare with the industry to industry and sectorial profitability, then the question would be tougher to give, because of the standard profitability has to be designed for that. Without standard profitability, you may not be comes into the conclusion whether this profitability is enough or not. Now see, the next is operating profit ratio. Operating profit ratio's formula is very easy, and I want to give you some link also how you can find out. Operating profit divided by sales into 100. But how you can find out the operating profit? Operating profit is equal to sales minus into bracket cost of goods sold plus operating expense. It means when you find out these things, this would be deducted from your sales, and that is your operating profit. So here your sales is 5 lakh and your total expenses is 4,13,000. So the difference is 87,000. Your sales is 5 lakh. The total amount of cost of goods sold and the operating expenses 4,13,000. So balance is 87,000. So the balance was ultimately here 413 was compared with 5 lakh. This is also compared with 5 lakh. What was your answer in the case of operating expense ratio? 82.6. So in case of that the 100 minus 82.6, your operating profit must be it's 17.40%. Let's see, 87,000 divided by 5 lakh multiplied by 100. See the answer? That answer would be 17.40% only. It's a very simple, there is no as such logic. It's very clear because of ultimately it's a partition of the total sales only. The total sales is 5 lakh, expenses is 413, the balance is 87. So 87 is a part of 5 lakh. Here also the base is 5 lakh, here also is the base is 5 lakh. If the comparison of this is 82.60, the total is 100, 100 minus 82.60, it comes to 17.40%. So this is what all about the part of operating profit ratio. There is one more ratio, and that ratio is stock turnover ratio. See the stock turnover ratio, how you can find out the stock turnover ratio, and that is also a part of revenue statement. The stock turnover ratio is cost of goods sold divided by average stock. Stock turnover ratio is cost of goods sold divided by average stock. Now here I want to tell you this ratio is always find out in number of times. This cannot be find out in percentage. So this ratio is not find out in percentage, but it's find out in times. Let's see. Cost of goods sold is already available here, that is 3 lakh. Cost of goods sold which was already find out at the time of operating ratio, and that is 3 lakh. Average stock you can find out very easy. Opening stock, closing stock divided by 2. So just identified your opening stock and closing stock, and what was the difference of that opening stock and closing stock? It is around, as per my calculation, is 87,375 rupees. Then the comparison of that 3 lakh divided by 87,375, the answer would be around 3.43 times. As I mentioned, the stock turnover ratio is always find out in times. What is actually shows and what is the analysis of this? The analysis of this ratio is the company have almost 3.5 times stock turnover in a year. That means the company is rotate that stocks in the year almost very close to 3.5 times. So ultimately, it is all the ratios are related to a revenue ratios, means all the variables has to be taken from the revenue accounts, and that informations are going to compare for that operating efficiency, operating situations, and as well as the efficiency of the organizations, whether the company is working as per their capacity and they shows their efficiency, and what would be the changes find out in the future for increasing of their profitability, controlling the cost, as well as the efficiency to be achieved in the coming days. This is what the revenue ratio is concerned. Now I'm taking another problem that is related to a balance sheet ratio. So all of you just referred your problem number 2. It is given in your practical problems schedule, and this particular part. For that second problem, it's related to a balance sheet. There is a one balance sheet, and they ask 4 ratios. One is current ratio, then the quick ratio, then the debt equity ratio, and the fourth is proprietary ratio. If you are going to see all these ratios which you are going to find out, the informations available only balance it. That means from the balance sheet information only all these 4 ratios to be find out, and that's why these ratios are considered as a balance sheet ratio. So from that you just refer first to your balance sheet. Balance sheet is actually given capital and liabilities, on the other side assets. Alright, on the capital and liability sides you have a long-term liabilities as well as the ownership fund and the short-term liabilities, that is current liabilities. On the asset side, fixed assets, investments are given, and then the current assets, loans and advances, and the short-term investments and other informations. From this balance sheet informations, we are supposed to find out the ratios one by one. So take it first ratio, and that is current ratio. The formula of the current ratio is current assets divided by current liabilities. Now, which are the assets to be considered under the current assets? Current assets like cash and bank balance if you have. So see in your question whether you have a cash and bank balance or not. Cash is given. Then check it out, debtors is given. The debtors is another assets. Do you have a bills receivable in your balance sheet? No, but bills receivable if you have, then the bills receivable is also considered under the current assets. Then investments which you have, but the investments we need to identify whether the investments are given for a short-term duration or a long-term duration. Suppose if it is mentioned only investments, nothing has to be mentioned along with the investments, is always considered it's a long-term investments. But if it is mentioned along with the short-term investments, like in this question it is mentioned it's a short-term investments, and that's why the investment is considered here as current assets. Then you just check it out if you have some amount of outstanding incomes or anything like that. No. So cash, debtors, investments are the assets to be given in this particular question. Now see the current liabilities. Creditors is given. Bills payable you have. Check it out. Bank overdraft. Then do you have the part of any provision for taxation? We have a provision for taxation, and that is given current and future. So both the things would be considered current as well as future. Here we missed out one asset, that is stock. Inventory. Inventory is also a part of current assets. So these are the assets and liabilities we identified from this question. Now, if you are going to make a total of these all current assets, the total it comes to around 40,000 rupees.